everybody, and welcome to another edition of Markonomics 101. This is for Wednesday, November 4th, right after the election. Now, oh, and by the way, I hear my phone ringing. Excuse me for a second. Hi there, Don. Of course, yeah, you ran a really good race. Thanks, I appreciate it. And say hi to Melania for me and tell her she'll never get me as much as she does want me. Anyway, I'll talk to you later, okay? Oh, another call here. Hi, Joe. You asleep? No, I'm sorry. Anyway, good run there, Joe. I'm sorry that you didn't make it, but I'll represent all the American people. Okay. So we're now ready for a great program. We're going to talk about what happened after the election. As you remember last time, we talked about it in scary markets. Remember that? Talked about how bad the financials looked, how bad all the, how bad a lot of the stocks looked, the key stocks looked, and said this thing is about to go off a cliff. Well, not so fast. So let's go to the charts and see what happened. Okay, we're going to start off with the Dow Jones Industrial Average, which you'll notice on this chart, green line, nice uptrend, broken around toward the end of it, and it's made a series of highs below highs below highs. That is a definition of a downtrend. A downtrend is a definition of a bear market. If a market is making lower highs and lower lows consecutively, it's in a downtrend. It's not going up anymore. So that's one of the things to just keep in mind. It's back to the basics. Okay, so this is the NASDAQ 100. Boy, this thing just took off like a rocket ship today and yesterday. Amazing, 4% move in really the biggest tech companies are, but still hasn't made a new high. And it still looks like it's basically making a topping pattern. So we're going to stick with that right now. And I'm going to be so bold as to say, I think today mark the peak of this cycle, and we'll see if that one turns up all right. Standard & Poor's 500, another exactly the same thing. Doesn't make a new high quite yet, and I don't think it will. Odds are it will not. If it does make a new high, if it goes above that intermediate high, then all bets are off. We got to go back to a new formula here, okay? So this is another reason why I'm not really thrilled about the stock market at this point. This is the Standard & Poor's 600 Small Cap Index. Now, what is a small capitalization company? Well, it's a company that's got about 250 million in market value to about 2 billion, roughly in that range. Now, those don't sound small cap to me. That sounds like a lot of money, but right now those are called small caps. And there's a major index called the Russell 2000, which measures all the small cap companies out there. And this is the S&P small cap index. What you can see is that small caps underperformed the big caps, which made new highs. These did not. And that's, again, you want small caps. You want everything going uniformly for the market to continue in a certain direction. When things are fracturing, that's when things start turning around. So Transportation Index, notice today it actually closed lower on the day. A lot of things closed down today that shouldn't have been down on such a big update. This isn't one of them, the Transportation Index. We're right near that red shoulder. And if we go through that, and I think it's likely that we will, it's going to be watch out below. So with that, let's go on to some of the big cap companies. These are mega cap. Apple being $1.5 trillion, worth more than the whole Russell 2000 by itself. But in any event, Apple is, again, still making highs below highs. So it's not really leading the market out. This is still in a pause pattern and probably a reversal pattern, I think. So we'll continue on with that. Amazon, same thing, still in a head and shoulders. We've been talking about this for a long time. It, bounced up off support. That's where you'd expect the bounce was going to occur. And it was a pretty sharp one, I got to admit. So next one is Facebook. Facebook has been just an incredible resource during this election period, bringing us the truth, bringing us, fact checkers. My facts right here has been checked so many times by these Facebook people. They still haven't found anything wrong with it. The thing doesn't work at all, but I don't know. People seem to get excited about it. Anyway, Facebook was up 20 points today, almost 10%, still in the head and shoulders pattern, not looking very good. Google actually has made a new high. This is one of the few that has made a new high here. And you can see Google shot up by like 110 points today. I have no idea what is going on with this, why this company is all of a sudden, taking off like a rocket. But this just looks like exhaustion to me. I mean, people don't buy like at the top of a market with this kind of volume, this kind of movement. It takes incredible amount of money to do that, an incredible panic and, acting emotionally. And that's what kills you in these markets. So Microsoft also, again, another shoulder attempt here. It looks like just filling in the shoulder here on the right of the chart. And again, support line right there in bold red and goes through that thing. And we have absolutely 100% reverse markets. That's what you should be looking for. Tesla, still looking in a relatively reasonable, okay pattern. I think this one will probably head down with the rest of them too at some point. But, one of the things that, if it were me right now, I'd be thanking my lucky stars that there's an opportunity to get out at these kind of levels, because you're not going to see them for very much. This thing is building a top. It's not going to see them for a lot longer of a period. And, if you don't take it today or tomorrow or the next day, you might not get it. So this is gold. Gold, we've gone back and forth on. And gold, in this case, I'm actually now becoming very constructive on precious metals again. I think gold and silver stocks are about ready to buy, but I wouldn't buy them yet. As a matter of fact, we're going to talk about this weekend, the new reflation trade, commodities versus financial paper assets. That's going to be this weekend in our special weekend edition of how to survive in these troubled times. Okay, let's keep going. This is silver right here, a fairly constructive pattern. Long term, it has broken down quite a bit, and I do think it's probably going to go up rather than down, but I wouldn't be in a hurry to jump into this. It's at very good levels right here, and even if you don't get it at the very bottom or time it perfectly, you're still going to have a lot of opportunities here. The opportunities are falling into your lap. What you need is liquidity so you can take advantage of them at the right time when that amber light stops flashing yellow, 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 and all of a sudden it's green. Go! All right. So these are the precious metal miners. This is called GDXJ. This is the junior silver and gold miners, also in a very constructive pattern. I mean, this looks to me like these companies are getting ready to be bought. So, just build your liquidity. You cannot take advantage of an opportunity unless you have the resources to do it. So if you have other stuff that's holding you down, this might be a good chance to get out and get into something interesting. Here's why we're going to double down on the scary market prediction, okay, that things are bad. Here's the bank index. We've seen 3 days of the Dow going up nearly 2,000 points, at least 1,500 points, and the bank index has gone nowhere. Look at that blue circle right there. And notice that island high, that second that little blip right there below the blue circle, that's called an island high. That's a reversal. That's a very, very difficult pattern, because what happens is you trade up in a gap, you then trade in a certain area, then you trade down in a gap the next day, and all these people are trapped that bought in or bought out at that island. And so they end up pushing the stock down in that direction because they need to get out. They've been basically whipped in a hurry. So the bank index is not going anywhere. And this is one of the reasons why this is a time to be very, very respectful of Mr. Market and to be very cautious and not to be all euphoric like everybody else is out there. So, be a little less euphoric. Now, if you want to be euphoric, think about a Markonomics 101 presidency with my vice presidential hound, Ace, the bad hound, right there, adding to policy decisions right there. Okay, so we're going to go on. Bank of America right here. We've got, again, a crummy looking pattern in Bank of America. These are I've got the major money center banks here. And this is Berkshire Hathaway, which I've talked about before, but it's a holding company for banks. Bounced off of a support line, but really looks bad. And this is a major, major cap company. Citigroup looks terrible. Money center bank companies, terrible. JP Morgan, terrible. I mean, this is probably the most prestigious and important financial institution in the country. And look at it. It's not participating in this rally. It's leading it down. That is not good news. That is not a good sign for stocks right now in the intermediate period ahead. Okay, so Wells Fargo, again, broken down. It's making new lows while other stocks are making new highs. This is what I mean by a fractured market. We get lots of new lows and lots of new highs. And the leadership is changing from from technology now to, on the downside, it's going to be financials. So with that, I want to thank you for tuning in today. We're going to have a really big report on coming up this weekend on commodities. So stay tuned. And this is the great place to be informed, not misled. Please like and subscribe us. We love hearing back from you and love all your comments and all that. And we'd love to hear from you anytime. Thank you very much. See you next weekend.